Hi everyone. I want to present this a small video clip on basic accounting, debits and credits with a real life example. And I believe like accounting is a matter of common sense. As long as you understand the nature of the transactions, it's easy for you to record that particular transaction as debit and credit. So who am I to talk about that? First of all, yes, I'm a chartered accountant and I have been in practice for the last 10 years and I believe I have a very good understanding of the fundamentals of accounting. So there's a reason I want to present this one. By the way, there are a lot of softwares in the market to record the accounting transactions, but believe me, a lot of mistakes people are making because they don't understand the fundamentals of accounting, the double entry system or the debits and the credit side. That's the reason like I want to present this video just to educate everyone with the common live example. Okay, so let's move on to the next slide. The debits and the credits. So it's called double entry system. What is the meaning of it? Okay, so means entered twice, double entry. That means entered twice. A particular transaction is entered twice. That's the reason it's called double entry system. So one time it's being entered on the debit side of the column, and the second time it's entered on the credit side of the column. That's the reason it's always called double entry system. Now let's look at the on the next slide. I'll look at the example how to record certain transactions on the debit column as well as the credit column. So in this example, I'm trying to show if you look at it, there are three columns. One is called description, and the second column is called debit, and the third column is credit. So there are certain transactions I have recorded. Okay, in this particular example, I have chosen is an employee who received a salary of $5,000 now, and also incur certain expenses and purchased certain assets. Okay, so let's look at that how these transactions should be recorded. So when he received the salaries and wages for $5,000, so he's debiting the bank is an asset and then the crediting the income. Okay, so if you look at that, so debit bank account because of their asset and then the credit the income. So later on he decided to purchase a computer for $1,000. So he's debiting the computer asset and then crediting the bank because he needs to reduce the bank balance from $5,000 by $1,000 because he already spent purchasing a computer. Now he incur other expenses on restaurant $500, stationery $100, gas $50. So thereby he is debiting those particular expenses and then crediting the bank because he already paid for all these expenses. So he has to credit the bank because his bank balance has to be reduced by the same amount. Now the last two items, if you look at that, it's a electricity bill as well as the telephone bill. He received his bill, but he doesn't need to pay right away. So thereby, he is actually debiting these two expenses and then crediting as payable because he has a grace period of like 20 to 30 days, so he could pay later on, but he is recording that one as payable on the credit column. Now, if you look at the total of it, both the debit column and the credit columns are equal because why? The same transaction you are recording it twice. So you record the $5,000 debit and a credit, $1,000 debit and a credit. So the each transaction you record it twice. So it should be equal. Let's move on to the next slide. All right. So in this slide, we are looking at the debit side of the column because we saw the example in the previous slide where how we recorded certain number of transactions, like you saw the cash when he received $5,000 or the bank or like direct deposit when he received, and then you saw the computer he purchased, and then he incurred the expenses on restaurant, meals and entertainment, or gas, stationery, and the all those expenses. So it's like now we have to decide how to record these transactions. There are only two items will be recorded on the debit side of the column. So it's very easy to remember. One is the assets and the other one is the expenses. So how to separate the asset and the expenses, or the assets from the expenses? So it's very easy. Assets will be used for more than a year. Like if you look at the certain examples, land, building, computers, furniture, etc. So these are all assets, long life span, will be used more than a year. So that's the reason these are all recorded as assets. Now if you look at the expenses, will be used within a short period of time, short life span, meals and entertainment, repairs and maintenance, gas, insurance, etc. So very easy to separate the assets and the expenses is the assets have the long-term lifespan and the expenses short lifespan. Now, for example, if you pay the expenses, say for example, if you pay insurance for 2 years, okay, if you pay the 2 years insurance expense, now you might be thinking, how can you call this an expense? Because it's a lifespan is going to run for a period of more than 1 year. Then it's going to be called prepaid expenses and it's going to be classified as asset, okay, or advance or prepaid expenses. So that's how. So it's basic fundamentals of the separation the of assets and the expenses is a lifespan. Anyway, let's look at in the next slide how to record the credit side of the transaction. All right, so this is the credit column we are going to explain to you. The credit column is a flow through of the debit transaction. Once you record the debit transaction properly, the credit side of the entry is a flow through from the debit. For example, when we discussed in the previous slide, the salaries and wages the employee receives, so you are debiting the bank account and then the credit the income, okay, and then when the particular employee purchase or incur expenses and then purchase debit the asset and then credit the bank account, because your bank has to be reduced because you have no longer $5,000 in your bank account, so you have to reduce it. For the computer purchase $1,000, the restaurant or meals and entertainment is $500. So similar way you're going to credit it. Now if you look at the last two items in the previous slide, where the expenses you incurred for the electricity as well as for the telephone, you are debiting the expenses and then you're crediting the payable. So it's a flow through of the debit. That's what I am trying to explain to you here is the debit, the credit side of the column when you decide is a flow through from the debit side of the column. All right, so thank you very much for watching this short clip. And if you like this channel, please don't forget to subscribe and also watch other videos on accounting, business, and tax. Thanks a lot, and we'll meet again in another video.